Hey, what's going on, guys? So I wanted to go live. I'm actually looking at a chart watching session right now. I apologize. I did not have a chance to do the call over the weekend because I was at a trading conference presenting. So um, I didn't get a chance to do that. But I want to go live for New York session, at least for the next like few minutes or so, next hour or so. Um, just give me 1 second. I'm pulling my charts up. Okay. Forex Factory, present, share screen, Chrome. So I'm looking at Euro futures. And if you guys can hear me, please let me know. I'm literally still chilling in my hotel room right now. Actually had to go down to Florida again for like a trading conference. Um, and so I just want to make sure that you guys can hear me and everything's good. So if you can, just throw a chat in the box or like something in the box, let me know and that we're good. And you can see the screen. So um I probably will do that weekend call either on my own personal channel or I'll do like basically the cap of what I'm looking for this week. This next week is probably going to be this week is probably going to be the last week that I'm trading for the year. Um, Next week is going to be Christmas. Week after that is going to be the New Year. So these markets are going to get really slow over the next week or two, and I don't really want to mess around with them. Especially when markets tend to chop, it's usually when people tend to lose their money because they're trying to force the hand on things that aren't there. So again, I'm looking at Euro futures this morning, and then I'm actually going to look at pound futures really quickly. So a couple things here on, and again, I'll do the call that I usually do. That kind of talks a little bit about what I'm looking for in terms of the market this week across every pair. I probably will just do it on my personal one. I probably won't log on the Trading Nut podcast and do it their account just because it's not the weekend anymore. So again, what I'm looking at, this is something that I've been looking at in the market for a while now, right? Just trendline liquidity. I think we're probably eventually going to take this out. We traded back into this old fair value gap right here, right? And then we rejected from that, I think, end of last week. So that's a good sign. So ideally, I want to see a high form for the week, which could be where we're currently at right now. This wick could be the high for the week and then keep going down. But ideally, sometime this week, I want to see a high form to continue on with this downtrend. We have basically higher level time frame bias that things are going to continue to go down. So this is technically a breaker setup right here. Right. So we took out this high, broke structure. And ideally, one or two things could happen. We could reject off of this. A breaker is essentially like a rejection of an order block that's failed already. So we could reject off of that breaker right there, or we could trade back into this fair value gap, right, and then go down. Either one of those things are permissible, and this is higher time frame bias. So I would just jump down to the lower time frames and kind of wait for confirmation there. This is choppy. What's going on? Okay, let me go to Euro. So ideally, I was looking at potentially entering into a trade off of this imbalance. This is kind of like that New York session continuation move that I always trade. So I'd never really trade London session. I have not done that in a long time. I just can't stay up. If I lived in the UK or if I lived in like the West Coast, like either way ahead of my time zone or way behind my time zone, I think I could make it work. But just living in the Eastern time zone, it's very hard to have a life outside of, you know, doing that. It's third shift job. So basically, so ideally, if we go to the weekly time frame on Euro, we're getting the same thing. I think GBP is actually the better setup because it's very, very clear. If you look here, there's a couple things. We have this fair value gap with a volume imbalance. So again, volume imbalance are going to be two gaps between candles. That fair value gap is right there. So you can see that. Boom, 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 boom. Get rid of these lines. Anytime I have a fair value gap that overlaps with a volume imbalance, I usually just kind of drag and extend that fair value gap. So this is what it would normally look like, but to cover up the volume imbalance, just kind of make the box a little bigger. So that way it kind of encompasses that and it kind of gives me a good idea. But we came into this zone, we tested it, we rejected it for this week, or this a couple weeks ago. We rejected it by taking out this liquidity in this gap, traded back in the range. The next week we had a rejection or a further move down, right? So we came in here, rejected. Last week was a very bearish move. So this is now kind of like our swing high point, right? So I'm just going to put an S here. It says swing high. So again, a swing high is going to be a very prominent high with a low on either side. This is kind of letting us know that we're probably heading on the right move, right? In the bigger sense of the market. So ideally, we zoom down to the daily time frame, and this is where we're currently sitting. Again, it's very similar to what we're seeing on pound, right? Where we had a higher high, higher low, boom. And then now we're currently sitting off of this order block right here as kind of our breaker, right? But then also we go down to the daily, the smaller time frames. We also have some ideas that we could continue to go lower. So right now we're respecting this 15-minute fair value gap. 15-minute time frame is a little too, I mean, I could trade this, like I could enter into a position right here and then put my stop loss like right above this order block right here. But I don't like this black. I don't like, I want to get surgical with the time frames, right? So I want to see something happen on this 3 or 5 minute time frame. So ideally, these smaller time frames are going to be like the children to the bigger time frames, and they're going to follow the bigger time frames are kind of like the parents, you know, like they tell the smaller time frames what to do, or you tell the children what to do. So in theory, whatever we're seeing on this bigger time frame should be playing out in the smaller time frame. So ideally, I want to see some type of breaker structure here, right? If we're going to respect this 15-minute fair value gap, I want to see some type of breaker structure that happen here. And if we get a break in market structure with maybe like a fair value gap like that, then I might take that today. The reason I'm trading today is because FOMC is on Wednesday. So this is an FOMC week. And my general rule with FOMC is that I do not trade the afternoon on the Wednesday of FOMC. I'm usually done for the week. And so your best trading weeks, the FOMC weeks, NFP weeks, your best trading is going to be done before those news releases. After FOMC, I'm sorry, with other news releases like CPI and PPI are going to be the other two big ones. Usually your best trading is done after those. The market usually consolidates before those. And with NFP and FOMC, the market usually consolidates after those. So you want to really kind of take trades and kind of plan your trading week according to the economic calendar, again, which is on Forex Factory. So because the higher time frames are bearish, if this inverts and this keeps going up, this doesn't really interest me. So I want to make sure that like just because this violates this and this will be an inverted fair value gap, and technically you could buy into that, but I don't want to buy because the higher time frames are bearish. right? So I always want to kind of keep in mind with what's going on in the higher time frames and kind of align my strategy to that. So hopefully that makes a little sense. So if this keeps going up and it doesn't respect this fair value gap, which it looks like it might not, there's also this order block here too. It's kind of like the last line of defense, I think. And see how it's 7:44. So we got about 30 seconds till this candle ends. And so when we talk about time and price, again, if you guys watch that free series that I did on YouTube, if we talk about time and price, then um, you know how that kind of factors into things. And a lot of times, if things are trending, if they're wicking over, or if they're looks like they're about to break a fair value gap on a particular time frame, look and see when the candles are about to close. Right, so the candle closes right now, and look how just in time before the candle closed, it respected it. So all this stuff is algorithmic, right? And it's all basically a big computer program. It's a big video game. And knowing how to, do this stuff and read these candles based on time and price really kind of changes the game for you. Um, so ideally, again, this is still a good setup for me, even if it violates that fair value gap, because this is an order block and the strongest fair value gaps will be in your order blocks. Um, um, as long as it stays below this, there's a couple of things here I'm looking at. So ideally, I wanted to stay, best case scenario, I wanted to respect the fair value gap. Worst case scenario, I wanted to respect the consequent encroachment of this order block right here. Always with my main order blocks, always write order block drawn on in time. Just to kind of give a reference of where the candle body starts and opens up at. Again, same thing with consequent encroachment. And then notice I also look at the consequent encroachment of wicks. So again, the 50% level of wicks. And in this case, it lines up exactly with that consequent encroachment there. It's not a coincidence. So there's a lot of good things here that could tell us that this could continue to go bearish here. So really just being patient and seeing what we get on these smaller time frames. Because right now we look bullish, but we could get a very, high-end breaker setup where it's like this, or, but really, so this is the part of trading where it's really just being patient. And like a lot of times, if you're in positions and you're like nervous or you're scared about your position, you either don't have enough confidence built up in your trading or you're over leveraging, right? When you have these days where you're on the edge of your seat and you're like running around back and forth with like a chicken with your head cut off, and then most likely you either don't know what you're doing or you have way too much money on the line, right? And that number, whatever's way too much money, is going to differ based on everybody's different, right? Like $1,000 might be a lot of money to somebody. $1,000 might be the bare minimum that somebody else might trade, right? So it's really just having an understanding of your psychology, what makes you comfortable on the charts, and again, it's like trading is like anything else. The more comfortable you are with this, the more you're going to actually be good. And so again, when I talk to my students, and when I was down at this, I'm actually still down in this conference in Miami right now, or in the hotel, I guess, but we wrapped up yesterday. And the number one thing that I told everybody is, again, I do a lot of analysis every day in the charts. I do analysis. I'm looking at the charts on the weekends. I come in for 5 or 10 minutes at the end of each trading day to see what's going on. And then I do a lot of work just to take 1 or 2 trades a week, right? Like I'm not trying to be in the markets every day. I'm not trying to, you know, do all that. But I train way more than I actually play the game, I guess, in a sense, if that makes sense. So I'm looking at the charts, I'm analyzing stuff way more longer than I'm actually pushing the button on. So hopefully you guys are doing the same thing. Again, it's all about getting your 10,000 hours in, and while you're trying to do that, you have to hopefully lessen your amount of I guess loss that you're going to take while you're learning, right? And so that's the worst thing you could do as a trader is try to rush the process, because all you're going to do is blow money. Take your time. Take your time. Yesterday when I was talking to a room full of traders. I think it was like 40 or 50 people in the room that came to learn. And yeah, I basically gave them the same advice. I was like, hey, like this is a game where you have to really, really, really like understand that you're not going to be profitable right off the bat. It doesn't matter who you see doing this. Like you could see me doing this, like whatever, if I take a trade today and whatever amount of money I make or lose, like just know that that's my journey, right? As a trader, it's not yours. Your job is to execute your account and grow it according to your trading plan, right? And don't try and, if you see me have a $3,000 day or at a $5,000 day on last week, right? But don't keep up with me. Just do whatever it is for your account. Because the minute you start trying to compare, what do they say? Comparison is the thief of joy, right? So the minute you try to compare yourself to somebody else is usually when it all falls apart. And for me, stuff didn't click until I stopped trying to keep up with everybody else number wise and just kept trying to be a good trader and understand the charts. I used to get so frustrated because there was times where uh, I would be I would have $100 day or a $200 day, and I would see somebody on social media had a $20,000 day on the same trades that I was taking, right? And I would be like, well, what am I doing? So please, 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 the biggest thing I could teach you guys, if you don't take a strategy, if you just take me in general, is run your own race. It's okay. It's okay to, have your $100 days and enjoy the $100 days. If I had to start all over again, I would tell myself to enjoy the process, right? And don't get frustrated. Enjoy every minute of it, because it's going to make you a way better person. So, yeah. So this is good. We're respecting those levels that I was calling out. I don't like how we didn't sweep here. Like these highs are very equal. So this means we could come back up here. This is a volume imbalance, right? So notice how this is the close of this candle, and then this is the open. So we gap down. It's kind of hard to see right now but if I go to the 1 minute, we gapped down here. So we closed here, and then we opened there. So this is where right now we're trading inside this volume imbalance. That's a good sign. So ideally, again, I still want to see this thing continue to drop, but it's about being patient. There's some news at 9 a.m. So maybe that might kind of trigger the market to go the way we want it to go. So we're seeing some good stuff here. Again, I just want to see a very convincing breaking structure.
The talk I give from 5 biggest challenges